Even, my friend's brother, who I thought a forex trader back then, had this one rule: don't take unnecessary risks. Even was the first guy I knew to be a trader in my neighborhood, even before I knew what trading was. And he lived by this one rule. Anytime we wanted to go to a party down the block that would run into the early hours of the morning, he would say to us, "Guys, don't take unnecessary risks." Anytime we'd be strolling down the street and we spotted an attractive woman, my friend and I would engage in a silent rock, paper, scissors duel to decide who'd approach her. However, Even, ever the cautious one, would interrupt our playful competition with his booming voice. "Guys, don't take unnecessary risks." Whenever we were debating whether to try the new restaurant in the neighborhood, Even would interject, "Guys, we don't take unnecessary risks." It got so bad that we nicknamed him Mr. Don't Take Risks. Fast forward a decade, and life happened. The neighborhood changed. People moved away. The pandemic struck. Crypto boomed. Fortunes were made and lost. And some of us, feeling brave or foolish, decided to try our luck with forex trading. Then I remembered I knew a trader, Mr. Don't Take Risks. So I called my friend and told him I recently started trading, and I would like him to connect me with Mr. Don't Take Risks, so he could mentor me and show me the ropes. The laughter on the other end of the line was instant. "Mentor you? Seriously?" My friend scoffed and burst out laughing on the telephone. "Listen, these days, Mr. Don't Take Risks doesn't even trade anymore. He's working in a factory somewhere, shuffling boxes all day. But sure, I'll send you his number if you want to catch up." I dropped the phone, and at this point, I was really curious as to why Mr. Don't Take Risk finally threw in the towel. I got on the phone with him, and after some minutes of awkward reintroduction, he finally remembered me. "Well, Harry, trading is a risky business," he said. "And you know me. I don't like taking unnecessary risks, so I decided that trading wasn't for me after all." Wow. I was stunned. "But you were a trader. A good one," I thought. What happened in all these years? I had been demo trading, taking my time to study and master a strategy. And when I finally felt ready, I went all in, and I got wiped out. He said, with a hint of regret in his tone. So I decided then and there that the risk of losing money was too great for me to bear, so I walked away and never looked back. Wow, what a waste, I thought to myself as we concluded the call. That night, I couldn't sleep. I kept replaying the conversation I had with Mr. Don't Take Risk in my head. He had lived up to his name, all right, but I was convinced I'm braver than him, and I wouldn't let the fear of losing money derail my ambitions. Surely, Avon had some deep psychological blocks he needed a therapist to unravel. Time went by, my trading journey got in full swing, losses were incurred, banks were blown, and the admittance that I needed help had to be made. I knew the strategy, I had the trading plan, a risk management plan. I knew my entry and exit points, but for the life of me, anytime I lost money, I would abandon all my plans and start chasing that loss. I would want to get my money back and start trading impulsively till I blow half or my entire trading bank. So I went to work. I set out to understand why this cycle of despair plagued my trading. In my research, I stumbled upon several books on the psychological aspects of trading. It was in these books that I learned that I wasn't so different from my friend's brother, Mr. Don't Take Risks. While his fear of losing rears its ugly head in paralysis of not wanting to trade at all, my fear of losing money came in the form of chasing losses. Some traders' fear of losing money manifests in the form of taking excessive risks to get a big payday, and what they end up doing is gambling all their life's savings away. In the end, all roads of unchecked fear led to the same destination: failure and financial ruin. It wasn't until I learned how to overcome this fear of losing money that I saw positive results with my trading. And don't worry, you don't have to see a therapist to overcome your fear of losing money. All you have to do is watch this video till the end. Fear of losing money in trading is more than just an obstacle. It's a silent thief that robs you of opportunities, growth, and progress. When left unchecked, fear fosters hesitation, stifles ambition, and creates a habit of avoiding challenges, not just in trading, but in life. And in life, avoidance of risks is avoidance of rewards. In this video, we will explore how to overcome the fear of losing money in trading, so that you can reclaim control over your trading decisions and embrace risks that can lead to rewards. 1. Grow your knowledge of the market. Fear in trading often feels overwhelming, but at its core, fear is just a signal. Your mind's way of telling you there's a gap in your knowledge or preparation. When you dig deeper, you'll often find that the fear of trading comes from not fully understanding the market or your approach to it. Think about it. Maybe your understanding of fundamentals isn't solid, and you're unsure how economic events impact the asset you're trading. Maybe you've spent too little time in front of the charts, meaning your screen time is limited, and you haven't yet noticed the subtle patterns or behaviors of the market. Perhaps you've never backtested your strategy, so you're unsure whether it will hold up under different market conditions. Or maybe the psychological aspect of trading is foreign to you. The good news is that every one of these gaps can be filled with time, effort, and the right resources. Here are some effective ways to expand your knowledge of the market. To grow as a trader, start by building your knowledge. Read foundational books like Trading in the Zone by Mark Douglas or Getting Started in Technical Analysis by Jack Schwager to gain essential insights. Complement this with hands-on learning by spending time daily on the charts, observing how prices move and respond to news. Deepen your understanding of technical analysis tools to make precise, informed decisions rather than relying on guesswork. 3. Stay up to date on economic factors that moves the market like central bank policies, inflation and employment reports to anticipate market movements effectively. Finally, surround yourself with experienced traders to learn from their strategies, mindset, and approach to accelerate your own growth. And one way to meet people like that is through WAP, the sponsor of this video. For a beginner or an experienced trader, WAP offers everything you need to succeed. With thousands of trading resources, free and paid courses, exclusive trading rooms, and insights from top traders, success is just a click away. But WAP isn't just for learners. Creators can launch courses, groups, or trading rooms in minutes and start earning right away. Their discovery page, with over 2 million weekly visitors, makes it easy for your audience to find you. Not ready to create? No problem. You can also earn as an affiliate by sharing links to your favorite courses or products and get paid for every purchase made through your link. And here's the exciting part. If your business earns $3,000 in the first month, WAP will fly you to New York, host you at their headquarters, and feature you on a Times Square billboard. You can join over 300 creators who've already hit this milestone. Click the link in the pinned comment to get started. Now, back to the video. Accept the risk. Accept the unpredictability of the market. One of the hardest truths to grasp in trading is that the market is inherently unpredictable. No matter how much you analyze or prepare, there will always be an element of uncertainty in every trade. It's this unpredictability that trips up many traders. They enter the market expecting to win every time, and when things don't go their way, fear and frustration take over. Let's put this into perspective. You can plan your route, check traffic updates, and follow the rules, but you can't really control how other drivers behave. A sudden lane change or unexpected traffic jam can still disrupt your journey, no matter how prepared you are. Even with a solid strategy that has, say, a 60% win rate, the outcomes of individual trades are still unpredictable. You might lose 3 times in a row before seeing your strategy pay off. The key to thriving in this environment is to embrace the unpredictability rather than fight it. Expecting every trade to be a winner is unrealistic and sets you up for emotional turmoil. Instead, accept that losses are a natural part of trading and focus on managing them effectively. But how do you prepare yourself for this unpredictability? That's what we will discuss next. Build a solid, personalized trading plan. Each person's risk appetite is different. Some are on one scale of Mr. Don't Take Risks, to the far end of going all in all the time, and everything in between. If you are to succeed as a trader, it is very important to create a trading plan that aligns with your personality, risk tolerance, and financial goals. Understanding your risk appetite and trading style requires self-awareness, and the easiest way to find out is to ask yourself, are you comfortable taking big risks for potentially higher rewards, or do you prefer smaller, more consistent gains? Do you like making fast-paced trades like scalping or day trading, or are you more suited to swing trading or long-term investing? Understanding your natural tendencies is building a trading plan that plays to your strengths and mitigates your weaknesses. And I must add that a plan that's tailored to you not only reduces stress, but also makes it easier to stick with your strategy during tough market conditions. As your experience grows, your plan will evolve too. Each trade teaches you something new, helping you refine your approach and adapt to changing conditions. This ongoing process reduces fear because you'll know you're prepared in trading within a structure that works for you. A solid trading plan is your armor in the unpredictable world of markets. The better it fits, the more effectively it protects you, allowing you to trade with confidence, clarity, and purpose. Start right, start small, and think long-term. When it comes to trading, starting on the right foot is crucial. The decisions you make in your early days can set the tone for your entire trading journey. A common mistake many of us made is rushing in with unrealistic expectations, going all in, or focusing too much on short-term wins. This leads to emotional attachment, heightened fear, and often unnecessary losses. Instead of taking a gradual and long-term approach which allows you to build confidence, develop your skills, and manage fear effectively. Starting right before diving into live trading is investing time in backtesting and demo trading. It will help you understand how your strategy performs under different conditions without risking real money. Starting small means holding back from the urge to risk big money right away, and it comes with plenty of advantages. It softens the emotional blow of losses, helping you stay calm and focused, helping you concentrate on perfecting your execution instead of stressing over how much is on the line. And as you gain more experience and confidence, you can gradually increase your investment. Think of it like building a house. Starting small helps you lay a strong foundation that can support everything you build on top of it. Starting right will also make the focus long-term. Fear often comes from having a narrow, myopic view of the market. When you focus too much on individual trades, every win or loss feels monumental. This emotional roller coaster is exhausting and can and will most definitely lead to poor decision-making. But if you zoom out and look at your trading journey in the context of years, the importance of a single trade diminishes. Over time, individual losses blend into the bigger picture, and what truly matters is the overall trend of your performance. Thinking long-term helps you resist the urge to chase quick wins or recover losses hastily. It reminds you that consistency is more important than immediate results. When you view losses as temporary setbacks within a larger journey, they become easier to accept and learn from. Long-term thinking focuses your attention on executing your strategy correctly, rather than obsessing over outcomes. When you start right, small, and you are thinking long-term, you reduce the pressure of immediate success and build a sustainable trading practice. This approach fosters emotional detachment, minimizes fear, and positions you for consistent growth over time. Overcoming the fear of losing money in trading is more than just a financial journey. It's a mindset shift and addressing self-doubt through preparing. With skills like backtesting and rewiring your approach to risk, you can turn fear into a stepping stone rather than a barrier. If you need reaffirmation on why losses are an important part of successful trading, you need to watch this video. Please don't forget to like, share, and subscribe to the channel if you found the video helpful. Until next time, thanks for watching.